Hello, Sector Watchers. Welcome to the show. This is the 173rd episode of Sector Spotlight for Tuesday, the 2nd of May. And I'm recording this on Monday, the 1st, right after the close of the US markets. And it is a bit of a special show because I am Julius Kempenaer and not presenting from Amsterdam, but from the StockCharts headquarters in Redmond, Washington. And you should see me sitting here right now in front of all this equipment. So we'll just go ahead and see how this works out. Next week, we'll be back to normal, although this is kind of cool to work with all this super fancy equipment. What are we going to do this show? Well, we were on hiatus last week, and that was because I was in New York attending this CMT symposium, 50th anniversary. That was really cool, and I'll probably do a write-up in the blog about some of the stuff that I heard over there. And this show, we will be starting with an error that I made. I'm not flawless, far from it, I would say, and the previous Sector Spotlight show, I was talking about the sector rotation model, and an error creeped in. I labeled something wrong, and we're going to address that. And, you know, the good news is I could have said, like, I stuck that in intentionally to see if there were people responding. That would have been not nice. It was my error, it was my fault. But the good news is that actually a lot of people came out and sent a message, and if you go to the YouTube video, you'll see a lot of comments and people saying, hey, something went wrong there. And they're right, you know, there was an error there. I don't think it was massive, but we're going to address it in this show. And then obviously, because last week was the last Tuesday of the month, which usually we use to deal with seasonality. And this week is the first Tuesday of the show, of the month, which we usually use to address the monthly charts. So you can imagine this is going to be a packed show, a fully packed show. We're going to do a little bit of addressing of the sector rotation model with the error. Then we're going to go to address seasonality. And after that, we're going to talk about monthly charts. But let's start with that as sector rotation model problem, if you wish. So I brought up the sector rotation model as you know it, and the error was when I was talking about the yields, the US yields. And as you can see, we actually labeled them as, well, either rising rapidly or peaking. And in the show, I labeled the arrow, I put the arrow here with falling and bottoming out, which would put it in full recession or early recovery. But of course, it should have been way more to the right, more like peaking or rising rapidly. And so I thought about this. Is this a real big problem? Is this gonna throw the whole analysis off? Because if you remember, we had the end result was somewhere that we're, you know, either moving from full recession to early recovery, and that the market was already back in coming out of a bottom, going into a bull market. I think the result of this mishap, if you wish, is not that big, because the thing is that when you label this, if you move off the chart here to the right, you immediately come back to the left. So if something is right here, it's actually also very close to getting to this area. So the end result, I thought about, I had the opportunity to think about this for about 2 weeks. And I think that the end result is that we are probably a little bit earlier in the cycle than I initially said and what I talked about in the show. That means that there might be a little bit more risk involved in the market, but I don't think we're at the peak, because the peak is right here. That's a completely different scenario. We're either coming right here or at the start of that cycle. So, you know, if we wrap this up, then I think that yes, it was an error. We labeled it wrong. It should be way more to the right, probably peaking. If I got a little bit more information now, you can see that rates have come a little bit lower. So I'm thinking that we're actually pushing that to the right and we're dropping off this chart and going back to the beginning. all these arrows are somewhere in this area and then right here. So if the end result would be for the market in a market bottoming, early bull market stage, economic cycle in full recession, getting out of it. End of the day, maybe a little bit more risk, but that also means a little bit more upside potential. We're going to wrap this segment, and then after that, we're going to start with a look at seasonality for the month of May. All right, ladies and gentlemen, now that we have that error out of the way, we can start talking about seasonality and what we can expect for the coming month of May. And I've got the spreadsheet in front of me that you're familiar with. And May is actually looks to be a very interesting month from a seasonal perspective. Let's take a look at the S&P 500. So SPY, 75% of the last 20 year months of May, the S&P closed higher than it opened. So 75% of the time, the S&P 500 actually moved up. That's a pretty good number. But when we look at the individual sectors, then there are a few very interesting numbers, because you know that usually, like a lot of times, they're sort of, moving around to 50, 45, 55, and I don't like that. I'd like to see really high numbers like 70, 80%, or on the downside, 30, 35%. And this month gives us a few of those numbers. And it starts immediately with the materials sector. Look at that. That's 35% of the time the materials sector outperformed the S&P 500. That means that 65% of the time materials sector was underperforming the S&P 500. That's a significant number. And then if we stick on the underperformers, then the other one is financials. 30% over the last 20 years, financials have underperformed the S&P 500 in May. And right now, that means that 70% of the time, the financial sector underperformed. So that is a very high number in terms of expected underperformance. And on the other side, we have communication services and technology. If we start with XLC, communication services, 80% of the time over the last 20 years, communication services has outperformed the S&P 500. That's a significant number. And that also goes for technology. XLK, 70% of the time over the last 20 years has outperformed the S&P 500. Those are really significant numbers, and they're worth looking at. If we stick on the spreadsheet for a little longer and we move to the section where we can have the average performance numbers for the month of May, you can see that they're actually lining up very nicely. So again, starting with the S&P 500, 75% of the time S&P closes higher. The average gain for the S&P 500 over the last 20 years is 0.7%, 70 basis points. That's quite good. And then if we go to the individual sectors, 65% of the time materials is underperforming the S&P 500, and the average performance over that time is minus 20 basis points. So if we relate that to the 0.7 of the S&P 500, it actually means, and don't get this wrong, because this could be confusing, the minus 0.2 is underperformance. So if the S&P indeed does what it's expected to do, meaning going up 70 basis points, that means that materials will still go up 50 basis points, so 0.5%. That is 0.2 below the S&P 500. That's what we're dealing with here. Again, if we stick with financials, that's expected to be 40 bips below the S&P 500. So even if materials and financials will go higher in the month of May, but they remain below the performance of the S&P 500, they are adhering to their seasonal expectations. And for financials, that would mean 0.7 minus 0.4 would be 0.3. So financials could go up 0.3, and then it will still be smack on in the middle of the expected seasonal performance. We go to the upside, that's the more interesting side, and we look at communication services. The average performance of communication services in the month of May, 1.2% above the S&P 500. So communication services, the expected return, if all of this works out and nothing changes, it will be 1.9%, meaning 1.2 over 70 basis points, making it 1.9. And if you go to the technology sector, that is, the expected performance there is 1% over the S&P 500, getting the expected performance for technology at 1.7% for the month of May. Now, we all know that this is pure theoretical. This is all based on historical seasonal tendencies. And here in Sector Spotlight, we're going to see if we can find an alignment of these seasonal tendencies and these seasonal expectations with the current rotations as they're playing out on the relative rotation graph. And we're going to do that right now. All right, and after the theoretical bit, we will start to what is happening in the real world. And for this, we have set up the relative rotation graph for the sectors on the left-hand side, and we can look at the individual charts on the right-hand side. And if we look at this RRG, then the good thing is that we can immediately see that the two sectors that we have identified as positive from a seasonal point of view, technology and communication services, are in the leading quadrant, and they've actually started to pick up a little bit again over the last few weeks. You can see that the area and the lagging is quite populated. We have utilities and staples moving up, and we've got consumer discretionary coming down again. And what I'm actually going to do is I'm actually going to isolate the four sectors that we were looking at from a seasonal point of view. So these were materials, that's XLB, that's financials, that's XLC for communication services, and then we've got XLK. So that cleans up our chart a little bit. And lo and behold, look at this. We had a positive seasonal expectation for communications and technology services in the leading quadrant, top right, and materials and financials are shooting off into the lagging quadrant. So it's quite unusual that they are all four, so four sectors with a strong seasonal tendency, and they are completely lining up with what we see on the relative rotation graph. So I feel actually very strongly about the possibilities for tradable opportunities for those four sectors going into the month of May. And makes it even more interesting is if we, because this is a weekly chart, and you know that's kind of okay for the seasonality. But if we bring this to monthly, then we get the longer term picture. And what we see here is that communications, services, and technology are actually coming out of the doldrums. They're actually moving from lagging into improving, which is super interesting. And materials and financials, and these are, mind you folks, these are really long-term trends that we're looking at. And we're picking up on those. And the seasonal expectations are actually completely matching what we see here. And if that is not enough, it also happens on the daily. So if you look at the daily RRG for those, then you can see that technology and communication services are coming out of a recent weak spot on the daily. So this is really short term, but that materials and financials are rolling over. And you can see how they came out of a stronger stint, now moving into a weaker stint, completely in line with what we've seen from a seasonal perspective. Now, we're going to bring this back to the weekly because that is kind of our time frame that we're dealing with. And then look at the individual charts. So on the right-hand side, we have materials. And as you can see, that chart, it didn't manage to actually run into resistance as a lot of other sectors have been doing. But more importantly, if you look at the relative strength here, the raw RS line is just holding up above support. And you can see the RRG lines with the RS ratio clearly below 100 and pointing lower. Relative momentum, making it kind of flat. That's why that tail is moving sideways. So it's moving in a flat line. It's not pointing into a negative heading. That's because of that pickup in momentum. It's not really a pickup. It's more like a flat. So all in all, the outlook for the materials sector going into May, not all that great, especially not from a relative point of view. Completely in line with the seasonal expectation for underperformance of materials going into May. We see kind of a similar picture with financials. And look at this. All support becoming resistance. That is certainly the case for the financial sector. We bounced off a longer-term support level right here around 30 bucks, 30.6, and we're now fighting with that former low that is now popping up as resistance. And again, here, look at the relative strength. Let me highlight this one here on the left. Relative strength moving lower, just a little hiccup, and RS ratio well below 100, pointing lower, pushed further down by weak momentum. So just like materials, the financial sector is completely aligning with what we see, what we expect from a seasonal point of view, expecting an underperformance going into the month of May. Now, on the right side of the equation, we have communication services. Let me highlight the chart like here. You see that it came out of, when you scroll back that recent rotation, you saw that communication services were actually really strong, moved into leading and then lost a bit of momentum. But over the last 2-3 weeks, we're starting to move sideways again, meaning that that loss of relative momentum is fading away and we're picking up relative strength again. And that's what you see here on the chart as well. And look at how that sector is pounding that resistance around 60 US dollars. When that breaks, that is a super strong sign for the communication services sector in itself. It will open up the way for a lot more upside potential in US dollar terms. But if we look at the relative, then you can see that trend has turned around and how that relative strength, that RS ratio line, is moving higher. And that green relative momentum line is sort of going into a pause, but you can see that it looks as if we're actually going to put in a new low above 100. And that would mean that this tail is going to pick up steam again and point into that top right-hand corner where we like to see it. So I really have good hopes and good expectations for the communication services sector, especially aligning it with that strong seasonal point of view. And when you can see XLC breaking significantly above that $60 barrier, I think that'll be a really good sign. And then finally, we have the technology sector, obviously the most important in terms of market cap sectors in the S&P 500. And you can see how that is already back in a nice uptrend series of higher highs and higher lows. We're struggling here a little bit with that overhead resistance in the 150 area. That is bothering relative strength, although that's holding up above its previous high, which is now acting as support. And you can see how that relative momentum came down, but the RS ratio line, the relative trend, is still pointing upward, certainly underscoring the positive expectation from a seasonal point of view for the technology sector. And here again, if technology takes out significantly that 150, 152 area, then the upside is wide open for technology, and that'll certainly help the relative strength. So all in all, if we wrap this up, technology and communication services really doing what we expect them to do. That's completely aligning with the expectations from a seasonal point of view. And on the lower end of the spectrum, we have financials and materials, which are shooting off into the lagging quadrant, and that is supporting that weak seasonal expectation. So I think for this month, 4 sectors that are 2 by 2 are really aligning with the seasonal expectations. So that's what it is for the month of May. We're going to wrap up this segment, and then the next one will be looking at the monthly charts. All right, and then it's time to start looking at monthly charts as we do every first Tuesday of the month. And I know myself, so instead of doing the wrap up at the end of looking at the charts and basically having not enough time to go over it, I started doing this at the beginning of the monthly charts segment a while ago. And I think that is quite a good idea to do it like that. And if we look at this overview, I mean, you can pause the video if you want to look at it or take a better look. But you can see that all in all, most sectors, not all, came in with a positive return over the last month. S&P picked up almost 1.5%. And in terms of trends, because that's what we're looking at here in the monthly charting segment, we look at absolute price trends. So not like what we do with relative rotation graphs or relative strength. We're looking at the relative performance. In this segment, we're just looking at that really big picture, coming in from a monthly charting level, and just look at what these long-term price trends are doing. And if we go over the list, and we've built this out over the last months, and you know that I've added a few columns here indicating whether I think that that market is in an uptrend or a downtrend. And as you can see here, only one sector changed, and that is communication services. That moved from a downtrend to an uptrend. All the others are still right there, but it adds about 8.1% of market capitalization to the uptrend, which is now at almost 39%. And as you can see, the downtrends are only at 12, because there's quite a lot of sectors that are in this sideways move that is not neither an uptrend nor a downtrend. If you look at the upside-downside risk, or upside potential, I should say, the support and resistance levels didn't change that much from month to month. So I'm going to leave it at this, and we're going to look at the actual charts that belong to this table. So here we are at the monthly charts, and there's probably not enough time to go over all of those. But here's the S&P 500 really quickly. You can see that is still struggling with that overhead resistance area. But all in all, things starting to look better. And there's actually people I noticed that are labeling this kind of area as a massive inverted head and shoulders pattern. And if that all plays out, then that obviously means that there is a lot of upside potential on the table for the S&P 500. Right now, I'm looking at this previous high here, which is around just below 4,200, and then the region here around 4,300. But I think that we can safely say that the bottom is in here, and the market is trying to push to a new higher high, which is actually a good thing. So the next one, and we're going to probably have to go really fast here right now. This is communication services. We already looked at that in the seasonality segment. That is really doing its going there up. That's really doing its thing. Here is consumer discretionary. That's not picking up yet. It's obviously an important sector, but it's under pressure, and you can see that the downtrend here is actually still intact. And you can see that on the thumbnail. You can see how these lows are coming in lower, and the lows are still coming in lower. So that still qualifies as a downtrend. Next one up is consumer staples, and that is in a sideways move. You can see how that is, moving between these upper and lower boundaries. If it takes out that upper boundary, that'll give consumer staples a little bit of a boost, but we're not there yet. We're struggling. We're very close to it. Here's the energy sector. We looked at that 2 weeks ago. That's still doing its thing. It's in an uptrend. It's one of the few sectors in an uptrend. You can see that this low here, although it is a spike, came in at a higher level, and we're now on their way to push higher. This is the all-time high for the energy sector. So all in all, still a pretty good picture for the energy sector as a whole. Here is financials. Not going to spend a lot of time on that because we've already seen that in the seasonality bit. In a sideways move, stuck between those boundaries very clearly. And then here we have the healthcare sector. And that's interesting because it's holding up above this former resistance line, which is now acting as support. And you can see that that horizontal level is coming in as well, creating some sort of a double support area. And this is also the all-time high level for the sector. So if we can maintain this and pick up some momentum, it'll get us out of that sideways move. And if we push above that level, we're back in an uptrend for the healthcare sector, which, as you know, is also a pretty heavyweight sector inside the S&P 500. Here is industrials. That's not going anywhere. That's just hovering around. No clear uptrend, no clear downtrend. So we're going to leave it at that. See if we can squeeze all of those in. Here's technology. We already looked at that in the seasonality segment. If we can take out this previous high here, then pretty much all the way is open to the previous all-time high here around 3,100. So that is actually looking pretty good for the technology sector as well. And then we have materials, the weaker part of the technology sector. If you look at the price chart here, that is stuck between those two upper and lower boundaries, not going anywhere. We'll label that as sideways. And then we are going to wrap it up with real estate. That is very clearly one of the weaker sectors in the S&P 500. We haven't seen the chart with the relative strength, but that's really going downhill. But if you look at the price chart here on a monthly level, we're seeing lower highs and lower lows coming in time and time again. And I wouldn't be surprised if real estate goes back to that 207 area where there is this massive support area. The upside, very, very limited for real estate. And then finally, we're going to wrap it up here with the utility sector. Again, one of these sectors that is sideways. It's still looking all that good, but stuck between these two boundaries around 320 and just above 370. That wraps it about all up for these monthly trends. So all in all, monthly trends pretty much as we had them last month. Communication services sector is the only one that moved over to an uptrend, and the rest still doing well, sideways, and the weaker ones, materials, real estate, still clearly in downtrends. And that wraps up Sector Spotlight for this week. I hope this all came out well in the new setting, and if it didn't, then it certainly wasn't the tech, but me playing up. Thank you for watching. I hope you enjoyed the show. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern on StockCharts television. And you can catch replays and watch previous shows on the StockCharts YouTube channel or any of the on-demand channels. Alternatively, find @RRG Research on Twitter, Facebook, or LinkedIn, or simply shoot me an email. I'm looking forward to seeing you again next week for a new episode of Sector Spotlight. Same time, different place.